Hey everyone, welcome back to Corporate Decoder, the place where we dig into company filings and try to find the juicy bits before anyone else. Today we're looking at OppFi Inc. And let me tell you, they've got some news that might make you sit up. If you like knowing what's really going on behind the big business headlines, you're in the right spot. And hey, before we dive in, if you dig these kinds of insights, make sure you're subscribed and join our Discord community too. Link down below for more exclusive chats. Alright, so OppFi Inc. is a EdTech company that provides credit solutions for everyday consumers. Think loans for people who might not get them from traditional banks. This report is a snapshot of their performance, giving us a peek at how they're doing. This is the headline grabber, folks. OppFi is saying they've hit record quarterly revenue and adjusted net income. That sounds good, right? But let's see what's really behind those numbers. They also boosted their outlook for the entire year. This is what we call guidance. When companies raise guidance, it means they expect to do even better than they initially thought. It's like telling your boss you'll finish a project ahead of schedule and asking for more work. Now let's get into the nitty-gritty. Their stock, the Class A common stock, is traded on one of the biggest stages, the New York Stock Exchange. You'll often see this symbol too, OppFi. It tells us people are actively trading their ownership in the company. And then there are these things called warrants. Think of them as a ticket that gives you the right but not the obligation to buy a share of stock at a set price, which here is 11.50 cents. If the stock price goes up significantly above that, these warrants become valuable. Their symbol is OppFiWS. It's a way for companies to raise money and for investors to potentially make more on their investment. OppFi is calling itself an emerging growth company. What does that mean? It's a designation for younger, smaller public companies that get some breathing room on reporting rules. It means they can follow less strict accounting standards for a little while, which can make their financials look a bit different from older, more established companies. It's like a startup getting a permit to park in a handicapped spot for a bit longer than usual. The date on this report is August 6, 2025. This means the information we're seeing is, as of this date, covering their second quarter performance, which ended on June 30, 2025. So we're looking at how they did in the spring months. They also put out a presentation. This is usually where companies try to paint the best picture possible of their results. They'll often highlight the good stuff and put a positive spin on things. We'll be sifting through that to see if their story holds up against the actual numbers. Let's focus on those financial results. They're reporting record quarterly revenue. Revenue is simply the money a company brings in from its main business activities. Record revenue means they sold more or charged more than ever before in a single quarter, but the devil is always in the details. Sometimes record revenue doesn't mean record profit if costs also go way up. Then they mention adjusted net income. This is a really important one to watch because it's not the pure unvarnished profit number. Companies adjust net income to remove certain expenses they consider one-time or not part of their core operations. It can be a useful metric, but it can also be used to make performance look better than it actually is. It's always good to compare adjusted numbers with the actual net income to see the difference. Their Class A common stock is listed here on the New York Stock Exchange. This is a major exchange, and being listed here means they meet certain standards of size and financial reporting. It gives investors confidence and makes it easier to buy and sell their shares. And signing off on this report is Pamela D. Johnson, their Chief Financial Officer. She's attesting that all this information is accurate to the best of her knowledge. It's a formal sign-off that brings a sense of officialdom to the numbers. Now let's talk about the actual story these numbers are telling. OppFi is essentially serving a market that traditional banks often overlook. They offer loans to people who might have less than perfect credit. This is a higher risk segment of the market, which means potentially higher rewards if managed well. When a company like OppFi reports record revenue, it suggests they are successfully reaching more customers or increasing the average loan size. If they're also increasing their full year guidance, it signals strong momentum and confidence from management that these trends will continue. This is generally a positive sign for investors. However, as I mentioned, the adjusted net income is something to scrutinize. It's important to understand what they are adjusting for. Are these genuinely one-off events, or are they recurring costs that are being smoothed over to present a rosier picture? Think about it this way. If you run a lemonade stand and one day you sell a lot of lemonade because you had a big party, that's revenue. But if you had to pay a fortune for the lemons that day, your actual profit might not be so great. Adjusted net income might remove the cost of those expensive lemons if they considered it a special non-recurring situation. In OppFi's case, we want to know if their operational costs are truly under control or if they are simply growing the top line. revenue by taking on more customers, even if those customers are riskier or the cost to serve them is higher than they're letting on. The fact that they are a growing company in a segment that's seen a lot of innovation means they have a chance to really capture market share. But it also means they face competition and potential regulatory scrutiny. The inclusion of warrants also tells us something about their financing. Issuing warrants alongside stock can be a way to make the initial offering more attractive to investors, essentially giving them a potential upside if the company performs exceptionally well. To truly gauge OppFi's health though, we'd need to see their balance sheet and cash flow statements, which would detail their assets, liabilities, and how much cash they are actually generating. This 8K filing is just a quick update. The full quarterly reports like the 10Q will give a much deeper dive. However, this press release and accompanying materials provided in this filing are intended to give the market the latest good news. So what's my take? OppFi is making waves in a niche market. They're showing revenue growth and are optimistic about the future, which is what you want to see. But always remember that adjusted numbers should be treated with a bit of caution. Keep an eye on how they manage their costs and the credit quality of their borrowers. Are they growing responsibly or just growing fast? That's the million-dollar question. Alright, that's our quick decode of OppFi's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.